Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at the weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed. And the more this market tries to rally here, the more I am warming up to the idea that it's going to be a longer rally than I thought. I'm just struggling with a few things, and I'll show you what those are. The reversal in bonds suggests jumping into financials. I think the bond charts have made a significant move, so that's probably something worth watching. Railways seem to be ready to break back out. They've been underperforming for a while now. I think that's well documented on my weekend market review, but they look like they're ready to turn upside. 52-week highs in truck transportation. So just when you thought the world was stopping, that's a problem. But anyway, what we're seeing is this move in the truck transportation probably tells us that there's more going on freight than we thought. And just to keep everybody updated, I'm traveling next week. So actually, I'm starting to travel on Wednesday. I'm in San Francisco on Friday or Saturday for the Golden Gate University conference. So that should be very good. And feel free to go to that website. You'd need to log in very soon here and get registered for the show. Again, it's an all-day Saturday show with some great speakers. I promise you, Craig Johnson and I will have a nice debate. We spent a long time on the phone yesterday talking about this market, and it's really set up interesting. I mean, if this, I've used the phrase before, but if this was a movie, we're entering a very interesting twist in the plot. So stay tuned for that. CMT Association meeting in Minneapolis on the 17th of September. That one's going to be fantastic. We're going to have a panel discussion with Katie Stockton, Craig Johnson again, so we'll get a replay. Ralph Akampura, Jay Woods from the NYSE. Should be an outstanding event, so looking forward to that one. And then the Toronto Money Show. I'm there on the weekend, September 20th to 21st. I'm speaking on the Saturday, but I would be thrilled if you're going to be down at the Toronto Money Show. Shoot me an email, gregs@stockcharts.com, see if we can get together for coffee or something. Canadian Technician Day is going to be October 19th, live and online. So that promises to be wonderful. And as always, thank you for watching the show. So now let's get into the data. Lots going on here. Okay, so today's market, the Dow shot up right at the end to close. No big deal, but it was, felt like turnaround Tuesday, where Monday rallied up nicely, and then Tuesday just kind of pulled back hard and then had no downside push and ended up closing higher. So let's just go look at these indexes. And there's a reason that I want to focus on this. Here's the daily chart setup. And what you see here is momentum is just, we're barely above the prior high. We've got an upsloping trend line that goes across the bottom here, and we've got a left ahead and a right shoulder. If we were going to fail here, this is kind of the worry zone. And so we want to just be aware of that potential. Now, look at the volume that came in today. Even though the market closed higher, it was a marginal higher. And look at how big the volume was yesterday and today. So there's definitely some either interested buyers showing up for work or trouble showing up. I'm getting the feeling it's interested buyers, and the reason is the financials, I think, are going to make the turn. And this turn is a pretty important one, I think. So with that, try and watch closely to just see which way this market goes. But for me, all of the stuff I'm seeing, and I mean all of the stuff that I'm seeing, is looking so good. So here's West Texas crude. It looks to me like it wants to break out to the upside here. Let's just see if I can update the chart. Yeah, this has September 10th update on it. So we're sitting here and we're just pushing above this this trend line, and with that push here, what we want to watch for is if oil's going to break out. I think that's a pretty good indicator. Now, I have a few other charts that I'm going to pull these from my commodity or from the weekend market review, but there are so many things going on. So let's just start with the commodities. And when we get into them here, just really quickly going to grab West Texas. What I want to show you on West Texas here is this triangle is forming, and the PPO is turned up and giving us a crossing signal for the first time, going all the way back to the end of May. And what we see here is if this is going to start to move, and we have an OPEC meeting on Thursday, and we have the Saudi Aramco IPO coming. And one of the things that is important, obviously, is the price of oil would have to be high, and that would aid in the valuation of that IPO. And on that, they plan on apparently starting off in the Saudi Arabia Stock Exchange and then probably adding on an additional at the NYSE. Now, one of the big things about that is it's a $2 trillion company. $1.5 trillion company. Either way, it would, I don't want to say dwarf, but it would, it would take all these $1 trillion companies that we see in tech and show that this oil thing is pretty big. So anyway, there's something going on there. But we're seeing the right price action in crude. Now, I have an energy chart list right at the top here, bullish percent energy. And one of the things that is in this list is this particular chart. And what I like to watch for is everything going above the 50-day moving average. And here we have XOP above the 50-day, actually that might be crude. That's crude up above 50-day, bullish percent index, XLE is above the 50-day, XOP is above the 50-day, and OIH, the oil services, are all above the 50-day. That's a bullish place to get on board. And what we saw here in this particular time frame in January here, they got on board, but they really didn't run. Whereas the previous example, when they all started to run together, it was a nice multi-month run, and that multi-month was a good place to be a part of. So anyway, that's what it looks like to me, and we're starting to get that sort of move higher. Now, one of the other places to look in here is the railroads. And one of the things that's been going on with the railroads is they have been slightly underperforming the S&P 500, and they have been down sloping. Well, if we go back to the daily chart, because it's hard to see on this weekly chart, but I'll show you on the daily. If the PPO is going to turn up right here, this is very bullish, coming down to the zero line and resetting and starting to head higher. So that would be comforting. But look at on the daily chart what happened here. We now have a break on this relative strength downtrend that's been going on since the end of May. And if the railroads are going to start outperforming, that would be helpful. That would suggest things are getting better. And we've seen the industrials start to pick up. So on the industrials, if they're going to start to make a move, this all suggests that things are getting better. And over here on the far right-hand side, let me just see if I can turn this on. There we go. If we can get this on the right-hand side here, we get the big move in the industrials, and they take out these prior highs. Well, can you imagine 52-week highs in industrials without Boeing? That would be just crazy. So anyway, watch for that, and that's what's trying to set up here. So we have the complexity of this Head and Shoulders top construction setting up right now, and we need to make sure that we have enough energy to blow through that. But on the other side, we're starting to get all of these indications that things are on a roll. Now, I pulled up trucking, but I pulled up XLI, but go look at this trucking chart, and what do you see here? This chart broke out today to new 52-week highs. So, well, not quite 52-week highs. I guess it would have been September. Sorry, this is October. So we're at 11.5-month highs. And what we're getting here is this sort of a breakout is a pretty big deal. Now, you could say the volume's low. Well, it's only 2 days into a weekly volume. And last week was only a 4-day chart. So if this thing starts to ramp up, I think we could see some big moves in trucking. Whoops. And what I want to watch for here, let's just go get a different chart. I want to go look for whatever, something like JB Hunt, and I'm just grabbing one of them, JBHT. And, look at this chart powering higher here, and big base it had built. This was a 52-week low down in here. And all of a sudden it turns and it breaks higher. And now it's looking very close to breaking out on the upside. So there's something going on with trucking. Look at this high roll off the middle of August here, and this thing's set to soar, and it's moving up $5 a week. That's a pretty nice looking chart. Anyway, look at the scooter ranking up in the top quartile here. And if we go down, we hadn't seen it up there since July of last year. So really nice move that we're starting to get in these truckers. And, when we start to see that, that has to add to our bullishness. So I've got all of these things going on that are starting to make me more bullish. And yet, the need to feel defensive is pretty big. So here's the KBE. And what I want to show you is as these bonds have reversed, all of a sudden we're starting to see these bank stocks take off to the upside, and look at the moves in the last couple of days. I mentioned this in my video a couple of weeks ago, and actually had somebody kind of ridicule me for suggesting that banks could go higher in the face of these bond yields. But that's what the charts are telling me. This breakout on a PP or on the point and figure chart got above the prior high, so this is starting to be bullish. And look at this, we're actually on a bull market signal with the blue line starting up and breaking the downtrend. So if banks were to take off here, wouldn't we all be shocked? And wouldn't if we were invested in there, maybe we'd make some money. So what we're going to cover off here are some of the bank stocks, and I want to go through them. This is 1 week, and look at State Street up 20% here. So we're going to take the numbers off the front of these, and we're going to put them in the order of the most recent performance here, just to go look at the list, rather than using the scooter ranking. We could do the scooter ranking too, and that would put the strongest ones at the front. Actually, let's try that. So let's just go edit this list, get rid of those numbers on the front end, and shoot to the bottom here. And by doing that, we select them all. Now again, it's this 0730 we want to get rid of, so we say remove the numbers from the front of all of the selected charts, and it disappears, and that's on the edit screen. And then we need to go back into the summary screen as soon as this finishes sliding up across the top here. We're going to go into the summary screen and pick the sort order. So again, we could either sort it based on the most recent performance, or we could sort it on the scooter ranking, whichever one is stronger. So we're going to pick the summary. Maybe let's stay with the scooter ranking and go that way. Now, one of the things about the scooter ranking that I want to point out is you can look in this area right around the 75s. A lot of times that's a nice breakout. And then you can also look down at the area around the 25 to 30s down in here. And when they start to get out of the deeply oversold and start to turn higher, they're interesting. So because the financials are so important, I think this is a worthwhile exercise. We don't need the word financial in here, so let's get rid of some of these columns. Sector, we don't need the links because we're going to look at it differently. Anyway, this gives us an idea of what they're going to do. So now we scroll to the very bottom of the page and hit number in sorted order, and that's going to take just a minute for this bar to run across the screen here. And then we're going to go in and look at these charts and just see what we find. But again, they're starting to run. And, if you were looking for something with a larger dividend in a bank and all of a sudden it starts to turn higher, you're going to get both the dividend and the price action setting up. So you might get a capital gain as well as the dividend in these banks. And this looks like a nice time to do that. So what do we see on T. Rowe Price? Look at this. This baby's breaking out to new, 52-week highs. Very nice. The chart's turning up above zero. That's bullish. Here's Ameriprise Financial. Big push this week, up almost $10. Yeah, 988, and looks ready to get up there. And if this is going to start to break out, PPO turning up right above zero. We've seen that movie before. That's a pretty nice movie back in 2016. And when we're looking at this, these turns, a lot of these are looking like this turn back in 2016. So just keep that in mind, that if we're going to start to get that sort of a setup and get a 1-year run on these, that would be beautiful. So anyway, keep your eyes focused on that. This was a 2017 bump on that one. But here's Credit Suisse. I mean, this thing was really looking ugly. Here we go, PPO trying to move into positive ground right here, ahead of the ECB this week, and this thing is surging higher Wouldn't take much. Just needs to. It's at $13. Needs to get to 13.35 to be at new 52-week highs. That's a rock and roll. So that's nice to see. Here's Equifax. It's actually rolling over. So this is kind of a defensive play, and it's moving the other way. Moody's Corp has been the same, so I would expect that's not the place to run and jump into. MSCI, this has just been a nice uptrend forever, but if it's going to roll over below 80, that's kind of one of the clues that you see on a full stochastic indicator that it doesn't have the momentum. So I would probably stay away from these ones that had already been up there and look for the ones that are starting to break out. Here's our good friend Jamie Dimon. I mean, this stock is at 116.87, and 117.24 would put you at new 52-week highs. This thing's ready to rock and roll. JP Morgan at new 52-week highs after spending a year and a half consolidating. I think you want to buy that every day. Westpac Banking, here we go. This is a really nice setup out around $20. Looks like it wants to turn up here. Again, a new 52-week high. You know, who would have thought this just 3 weeks ago when all of these charts were so pushed down? Anyway, here we go on the National Australia Bank. Probably don't need to worry about that one. Getting into Key Corp. This one's trying to do the same thing here. Break out to new 9-month highs. U.S. Bank Corp. Oh, wow, this is a beautiful base. So it's been sitting here for 2 years, recently shot up, pulled back, and now it looks like it's ready to go again. This is really nice. I particularly like the fact that it had a retest, held at the 40-week moving average, and is ready to go. All of these exchanges were doing really well while the rest of the financials were ugly. So I think what you might see here is they'll sell the exchanges and buy the banks. So I'd probably want to avoid these, and if I was in them, I'd probably let somebody else own them. Here's Goldman Sachs. It looks like it's just a couple of dollars below an 11-month high there. Regions Financial, same thing, just a half a buck below new 10-month highs. So all of these look like they're ready to rock. I mean, this is nice. This bank in Nova Scotia is a really big emerging market bank. They do a lot in Latin America. The PPO is turning up above zero. It's actually above zero already. It's crossed above its signal line. So you're on a buy signal. It's breaking this long downtrend. And if what I think is going on is going to happen, then we're going to get a big surge in emerging markets. And with the surge in emerging markets, this bank does particularly well. So this is nice to see. SunTrust Bank, this one looks not too much to get through to a new 52-week high there. CME Group, same thing. This is an exchange. I'd sell that one off and buy something else. Talking about what I'm doing, not necessarily what you have to do. I did not think these Japanese banks would be coming off this June low. I really didn't. This thing was making new 15-year lows or something. Anyway, look at this shoot up. So obviously somebody's expecting some serious stimulus worldwide from all the central banks. So the U.S. Lowering interest rates next week, and then the European Union coming through with Draghi's last stand and something that would kick up. So here we go with Citigroup. Again, it just has to get through $73 to kind of push everything up. It's at $69 and change, so another 5%. CBOE Holdings, same thing, an exchange. I'd let somebody else have that right now. And then here's BB&T. It's just barely. It's at 51 and a quarter, and it's got to get through 51.52 to make a new 52-week high. That probably happens tomorrow. PNC Financial Group. This one, same thing. All of these bases are all setting up. Look at the PPO riding up above zero, pulls back right at zero and starts to take off. That is just really bullish price action. So want to see that. Here's Credit Agricole, big downtrend. This is French Bank, if I'm not mistaken. And what we see here is, starting to break the downtrend above both its 10 and 40-week moving average. PPO is turning up very close to zero. Full stochastic moving above 50. Like everything we want to see here. So I really like that. NASDAQ OMX Group, again, this is an exchange, so I'd expect this to roll down with the rest of them. Citizens Financial Group, this one doesn't have much to get through here, 37.85, and we're trading at 36 and a quarter, so still needs to go up about 7%. Royal Bank, wouldn't much like the JP Morgan in the US, wouldn't take much to break out here. Mitsubishi Financial, another Japanese bank. Look at that. This thing is breaking out to new 5-month highs. This is as good as it gets. I had not pre-checked all of these charts. I thought we'd see where they're going, but these things are ready to rock. And again, this is Tuesday's close. So lots of things rocking on here. Looking at Intesa Sao Paulo, so this is an Italian bank, and we're back above the 10-week and the 40-week. Look like we want to head higher here. So it's made a higher low and now turning back up again. Very bullish formation. Raymond James Financial, this one's back above the 10-week and 40-week. All of these banks are stepping on the gas. Here's Societe Generale. This thing was at massive 10-year lows or something, and all of a sudden it's breaking out and moving back above its 40-week moving average, which it hasn't even been near since May of 2018. And when it first broke out back in 2016 above its 40-week, that was a real clue for a lot of gains there from $7 to $12, so almost an 80%er in a bank. Northern Trust Corporation, consolidating sideways for 10 months. It's got a little bit of work to do, but PPO tucked right at zero here. Again, could have broken either way. It looks like they want to start to break higher. Canadian Imperial Bank of Commerce, this has been beat up a little bit, but at $80, it pays a 5% yield, ready to rock. Bank of America, again, same thing as the JP Morgan chart. This thing's ready to go. And PPO right at zero, looks like it wants to turn higher. You know, you see this, see the same base being built on these charts over here. And when it finally broke above those prior highs, it was a super surge and on it went. Call it $16 to $32. That was 100% in about 18 months in a bank. Toronto Dominion or TD Bank, big bank in New York now in terms of retail presence. This looks ready to break out to the upside. This is just very powerful. Okay, we're going to pause for a commercial very quickly here, and then we're going to come right back and finish rolling through these charts, and then I'll finish up looking at a few of the bond charts. Okay, and we're back. And what I want to talk about here is we've got UBS Bancorp again. Some of these foreign market banks starting to put on a big surge in the last, this is only 2 weeks on a lot of these bars. So these things are starting to move. Let's go look again over at the bonds. And the reason I want to show you this is because it's this bond inversion or bond reversal that might be driving what we're seeing in the charts. So okay, so here's LIBOR, and what we see on the LIBOR chart is, it's been stabilizing down in this area after waterfalling for a while. No big deal there, but here's HYG. If this is going to start to break out to the, sorry, I missed HYG. Somehow I went right to IEF. HYG, if this is going to break out here, this is very bullish. And again, if risk is rising, so is this. So it's been consolidating for a while. A little push here wouldn't take much to hit new 52-week highs, and that would be on its way. This is the 7 to 10-year bond. Where would we expect it to roll over? Right about here, and the RSI is just breaking down now. And look at how high this PPO was, way up in the range where it broke down before. So lots of reasons to expect some problems there. Here's HYG, the ratio, and this thing's starting to turn back up again, which would be bullish. A break of this trend line suggests getting long. LQD, this is the corporate bonds. And again, if this is like breaking out to new 5-year highs, now all of a sudden rolling over. I look at the PPO way up here at the highest level it's been at in 15 years. If you're expecting a reversal, that's probably not a bad place to look. And here's the tips rolling right over kind of at the same level it did in 2016. This is also when gold rolled over. So for golden shareholders, you might want to at least confirm that you've got some profits and lock them in somehow using options or sell some, diversify a little. Anyway, here's your TLT chart pointed straight up, and it looks like it's rolling over pretty significantly here. And getting into this sideways mode. And the one thing that I think is important here is when that TLT chart is going to reverse, this is really a strong move. And so to see getting up into a major overbought situation and then a reversal from it. It could come all the way down to this trend line meaningfully, give back all the major gains here, and then have all of these banks start to super surge. So I think the central banks around the world, if they're all going to come together, that's probably going to force these financials back to the upside. Okay, look at this the 10-year in the US, and all of a sudden it's starting to super surge the other way. So we had a big outside reversal last week, lower low, higher high, higher close, and then this week it's off to the roses. Like, this thing is just running. So a big move off a major low. This is also where we bought them back in 2016. So if we're starting to see that same inflection point, that would be meaningful. And I think if this trend line gets broken here, that just kind of confirms that the reversal's in place. So try and watch that. Now here's the 5-year. This thing has just shot up. I mean, it was a massive move in a couple of days. This is a daily chart. Starting in September 1st, it was kind of at its lows, or September 2nd. And look at this ballistic move. This thing's wiped out a month worth of work in a week. So it seems to be on its way. And I've been covering this off in the market review on the weekend, mentioning that the financials look ready to reverse. So I don't think you're too late here. These are just getting started. Here's the U.S. Treasury, and what we see is it's way down here at this minus 12 level. And back in 2001, it got down to the same level and then rallied up. And when on that rally, the one thing that was important is, in both cases, there were big rallies in the S&P. And so I would just, if this bond thing is going to reverse at all, it'll probably give us a shot in the arm with the S&P. And we saw it even in 2008. It came down and then the S&P had a big rally. Now, if that doesn't all work out, then that's a more important place on the chart. But let's worry about the bottoms before we worry about the tops. Okay, the 2-year, if this is going to bounce right here at 0, that's a very bullish place to bounce. So that would help support the case. And the 3-month, this thing had been plummeting. Obviously, mid-August made that huge stab low. Been consolidating so far. But if this was to start to turn up here and confirm that moving the short end of the curve up, moving everything up, that would be a big deal. Okay, the 30-year, again, just to wrap this up in a bow, this thing, the momentum is way up here at 3%. It can get a little bit higher, but on the MACD, it looks like it's one of its highest. So the PPO gives us some clues that the MACD doesn't. So anyway, I think it's worth watching. But the idea being, if these bonds are going to reverse, gold will probably reverse. All of those other areas people were hiding in the financials would get sold off, and they'd revert into the banks and the brokers. So I would encourage you to line up those charts, see if there's anything there you like while the dividends are still a little bit juicier, and see if there's something for you. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows. And I want to end by going back to my slides. My slides. What I wanted to show you on the slide was that my schedule. Try and catch me in San Francisco or in Minneapolis or in Toronto. Thanks, everybody. Have a great week. Bye-bye. Here's how to put a simple line on your chart without using the annotation tool. Let's say we want a line in here at 47.50. You can just drop down here into the overlays, pick horizontal line, add the price point, 47.5, and we're going to use a red line. We're going to make it solid and thick and hit update, and that blasts it into the middle of your chart.